Hey guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brett Rasmussen. And this week we are talking about refinancing. And is that a conversation we've had in some time? Yes. Interest rates have nearly been going up the last two and a half, nearly 3 years here now. And now the news and the media is out saying, hey, rates have come down. And so today we're going to talk about when is the right time to refinance. What's nice here at Mortgage Specialists is if we've helped you with your loans, we have a system that's able to track when a good time is for you to refinance that situation. And we will reach out to you and say, hey, now is a time that it makes financial benefit or financial sense to have that loan make sense. So we're going to talk about that a little bit today and what kind of goes into that timing of it all, because we see lots of people contact us or reach out or want to know where rates are at, and much of the time, still refinancing does not make any sense. And we want to make sure it does make financial sense, where some of our clients have loans with certain large lenders and they're getting serviced by that large lender. And they think, well, it's easy to go back to that same lender because they have all my paperwork. And I would tell you that doesn't make any difference, because for all secondary market loans that we talk about, Fannie Mae, Freddie Mac, FHA, VA, we have to start with a brand new loan with all brand new documentation every time you take out a mortgage. That's existed since 2008 because of all the no documentation loans that existed. The government came up with federal laws to stop those stated income, no documentation loans, to not have to verify your income, your assets, your credit, things like that. So, this video is currently happening in the early fall of 2024. So rates are finally starting to tick back down. We got as high as nearly about 8%, 7.5 to 8%, depending on what kind of loan you're looking at. But I'm talking about perfect credit, great down payment, conventional loans. And the media many times is going to find, or even lenders are going to find the cheapest rate, and they're going to advertise that. But we've talked about this before, the cheapest rate isn't always the best loan for you, because the cheapest rate comes with costs, points, extra fees, all of the above. So when we talk about interest rates, we talk about APRs, which includes the closing costs as well. And coming off of all-time highs at 7.5 to 8% APR, we need generally that rate to drop low enough to have it make sense. So we've seen lots of people think that 5 or 6% is a high rate. Well, it might be in comparison to three and fours, but we haven't seen those kind of rate environments since, COVID and the pandemic, because the government got involved in Federal Reserve to lower rates to stimulate activity. And there's a lot of variables that have happened since then, and inflation being the big key. It seems like right now inflation is getting more under control, hence why interest rates are starting to come back down. But what do we look at when we work to refinance? Generally, people are wanting to lower their payment, lower the rate, cheaper the payment. Some people right now are wanting to cash out, pay off some bills, debt consolidate, finish a basement. Some people, like we deal with a lot too, are also going through a divorce of some situation. Either it's going through or they're completed with it, and they need to refinance in a certain period of time. And obviously, the lower the rate is, people have been sitting by the sideline waiting for the rates to come down. And again, lastly, some people look to lower their term, going from a 30-year down to a 15-year, if it makes sense for them in their situation to pay their loan off early. That conversation we haven't had very regularly because of the cost of everything going up, but there's still people with a lot of disposable income out there that have the extra money to be able to pay on a 15-year loan with a cheaper rate than a 30-year loan. So let's get to it here and answer your question about when is the right time to refinance your mortgage. And that all depends. It depends on a few different variables. It depends on how much you owe, what your credit score is, how long you've had the loan, what your rate is, all different variables and how we price out different interest rates. But what we look for, honestly, is a break even calculation. We see, and the reason why we want to put this video out there today is, again, clients will call large lenders, and those large lenders will always tell them it's a good time to refinance. They'll ask what their rate is, and they'll basically get the number to a low enough number to have it make sense, but they don't cover that closing cost. So the simplest way to determine when refinancing makes sense is looking at the savings of the principal and interest and divide that by the closing costs. On every loan that you obtain, there's going to be closing costs, and people forget about that when they're taking out a new loan. They're not so worried when they're buying a house, but when they already have the loan, we want to make sure that the savings is going to offset the closing costs. But the last variable that we want to know is how long you're going to be in that house. If you're going to be in the home for a very long time, 5, 10, 15, 20 years, refinancing makes sense, because generally speaking, we want to see the break even on your refinance be at about 3 to 5 years, somewhere in that window or less. Obviously the better, because people's lives change and they do move houses generally every 5 to 7 years. It's been lower than that lately, but in the normal markets we're seeing 5 to 7 years. So sometimes if your break even on your refinance is 10 or 15 years, financially that might not make the best sense for you to obtain a mortgage or refinancing your loan. Even though you say, hey, look, my rate's at 7.5 and I'm going to 6.8 or 6.9, that feels better. But if we do the math and say, okay, your closing costs are now this number, say $4,000, and you save $100 a month, we divide those two, and that's a 40-month break even. But you might tell me, hey, in the next 2 years, I plan on selling my house. Well, then that makes no financial sense. And we are honest and want to cover that with all of our clients up front. We'll tell them this doesn't make any sense now. Let's see if we can wait it out longer. We'll keep tracking rates. If they come down farther, then we'll reach out and say, yeah, here's the break even point. Here's the time frame that we want to see this particular situation happen. And we've done that through all the years Mortgage Specialist has been around. We don't just do loans to make money. We do loans that make financial sense for our clients and our customers so that they're happy at the end when everything's said and done. So, again, who do you go through or who do you speak with, and when is the right time to refinance your mortgage makes an enormous difference in our eyes. We see lots of out of town large lenders that advertise on TV will tell you it's always a good time to refinance. We don't always agree with that. We show you the numbers and say, here's the break even, here's the time frame, here's what we expect. And no one knows exactly how far rates are going to come down. Are they going to come down to, 3%? Again, probably not. 4, probably not. Maybe in the fives, 6%, sure. So every single scenario for every single customer and client is different. If you owe a very small amount of 40, 50, $60,000, you're not going to get the same rate as someone borrowing 3, 4, 5, $600,000. And the interest rate difference makes a huge deal. Whether you owe 600,000, you're dropping 0.5% on your interest rate, or if you owe $50,000 and you're dropping 0.5% on your interest rate. Those two numbers look different. And what I can share with you is that closing costs on a mortgage generally are about the same, whether you're borrowing a small amount or a large amount. So we analyze each one of these situations for you. We keep track of this in a database. We go over all the costs, all the numbers, what the payment looks like to make sure that it makes sense for your situation, because that's what it's all about. It's your personal financial decisions, whether you want to retire now, later, what you want for a payment in your budget, in your household, because you're the one at the end of the day that's making the mortgage payment. We're just here to help guide you and answer any questions that are possible. But as rates are coming down, we would love to help you here at Mortgage Specialists. Definitely reach out anytime to us, and we will review your loan and put together numbers for absolutely no cost to say, here, it makes sense, or maybe not quite yet, and or maybe it doesn't make sense at all. So again, I'm Brent Rasmussen, owner of Mortgage Specialists, here with your 143rd episode of Mortgage Matters in Minutes. So please like and subscribe here below for more information, more content about simple real estate and mortgage questions and answers. Have a great rest of your week. Mortgage Specialists. Driven, trusted, reliable.